Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik and today we're going to be doing a brief stock analysis on Procter and Gamble stock, ticker symbol PG. So Procter and Gamble is a consumer staples company, which basically means they just sell a lot of products that people use every day and sort of just need for everyday life. So these are their basic segments. They have beauty, grooming, healthcare, fabric and home care, and then baby, feminine, and family care. So these are just some of their brands over here on the right. You probably recognize a lot of them, like Head and Shoulders, Old Spice, Gillette, Crest, Pepto-Bismol, Tide, Mr. Clean, and many others. So that's basically what they do. And if we look at their main homepage of their investor relations page, they've been in business since 1837, and they sell products in over 180 countries. They've been increasing their dividend for over 64 years. I think their recent dividend increase puts them at 65. And then they have over $71 billion in sales. So they're a pretty big company, and they have products in pretty much probably the vast majority of homes across America. So first we're going to look at their third quarter results for 2021. So that third quarter is actually, the quarter that goes from January of 2021 to March. So they released that just a few days ago on April 20th. That's a little bit funny, but we're not going to talk about that. So they say that they reported third quarter fiscal year 2020 net sales of 18.1 billion, which is an increase of 5% versus the prior year, and excluding the impacts of foreign exchange acquisitions and divestitures, organic sales increased 4%. They said diluted net earnings were $1.26 per share, which was an increase of 13% versus the prior year, and an 8% increase of the prior year of core EPS. So operating free cash flow is $4.1 billion for the quarter, and they have this metric that they reference called free cash flow productivity, which is basically the free cash flow divided by the net income. So for this quarter, that was 106%. So they had slightly more free cash flow than net income. And they say they returned $5 billion of cash to shareholders via about $2 billion of dividend payments and $3 billion of stock repurchases, which is fantastic. And they say earlier this month, they announced a 10% increase in the quarterly dividend, marking the 65th consecutive year the company has increased its dividend. And they also say they've been paying their dividend for 131 consecutive years since the incorporation in 1890. So the CEO had a statement here. He basically said, "We delivered another quarter of solid top line, bottom line, and cash results in what continues to be a challenging operating environment. We remain focused on executing our strategies of superiority, productivity, constructive disruption, and improving Procter & Gamble's organization and culture. These strategies enabled us to build strong business momentum before the COVID crisis and accelerate our progress during the crisis, and they remain the right strategies to deliver balanced growth and value creation over the long term." So that is good to see. And as we'll look for some of the full year 2020 metrics, they really did rather well throughout COVID. So you can see their fiscal year 2020 results, which I guess is just basically around July of 2019 to the end of June of 2020. So it really didn't get the full brunt of COVID, I guess, just a 3 or 4, maybe 5 months into COVID, but it was definitely still affected. So it's good to see that organic sales were up 6%, EPS was up about 13%, and then they have that free cash flow productivity ratio there, which is at 114%. As I say, last year, we grew markets and increased household penetration in multiple categories, driving top-line growth, bottom-line growth, and market share. Organic sales grew 6% on a 2-year stack basis. Organic sales growth has accelerated from 3% across fiscal years 17 and 18 to 6% across fiscal years 18 and 19 to 11% across fiscal years 19 and 20, indicating the underlying strength of our brands and our strategy, which are driving our business. On the bottom line, core earnings per share were up 13% versus the prior year, and on a constant currency basis, core earnings per share were up 17%. All-in GAAP earnings per share were up significantly versus a year ago because of last year's one-time non-cash accounting charge to reduce the carrying value of the Gillette Shave Care business. And they do say that they were at 6% organic sales growth and 18% core earnings per share growth and 96% adjusted free cash flow productivity for the first half of the fiscal year before the impact of the pandemic. So they're basically saying that their results, they were doing even better than it looks like this year, and the pandemic impacted them a little bit. So Overall, still pretty good. They say 9 over their 10 product categories grew organic sales. And home care and personal health care grew in the teens. Family care grew double digits, and then the rest grew single digits. And then baby care was down 1%. So that's pretty good to have 9 out of 10 of your basically product categories growing in a year where there was a big pandemic. And they also noted their strong results in the most profitable markets, which are the U.S., which grew organic sales 10%, which includes 5% in the first half of the fiscal year. And then Greater China grew sales 8%, which includes 13% organic growth in the first half of the fiscal year. And then they also note e-commerce. That's definitely a big thing for them. They want to make sure they're getting into that space and continuing to grow in that space because of the recent trends. So they say e-commerce organic sales grew 40% and now are over 10% of our total company sales. So that is pretty good to see, and they're on the right path. And then also on their investor relations page, they just have some highlights here, which are good to see. It just allows us to look at a little bit longer of a trend. So, net sales, we can see over the past, 5 years, they've just been steadily increasing them a little bit by a little bit. And that's what we like to see in a solid company like Procter and Gamble. Again, operating income, a similar trend. They had a fairly substantial dip in 2019, but I think, as they mentioned, that was partly due to the something to do with Gillette. Overall, pretty good results, and you can just see they're continually increasing these numbers over the years. And then just looking at the dividend briefly, they have a yield around 2.6%, which they just increased that dividend. So they have a payout of $3.48 annually. The payout ratio is right around 62%, which is fantastic for this type of a company. I think the 5-year dividend growth rate is kind of low at only 4%, but they did just increase that dividend 10%. So definitely not complaining there. And as we stated before, they've been increasing the dividend 64 years, which is 65 now. So they are a dividend king. And just looking at their stock price over the last year or two, you can see it's definitely up near, sort of near all-time highs. If we look a little bit closer in, I think it's still right now at a fairly good price based on earnings and where those are looking. It's definitely not a steal of a deal, but compared to recent prices, I think it's a good discount. And we're going to look at some of the PE ratios from historically right now. So historically, you can see their PE ratio over the last 10 years was around 15, up near 20 a little bit, but mostly between 12 and probably 18, I would say. And then in 2019, it was up around 20. And then recently in 2020, it's been up around 25. So definitely not the best discount compared to historically, but the overall market is just not at a discount compared to historically. So everything's going to trade at a premium. And just comparing it to the sector as well, we said their current PE ratio was 24.57, and the PE ratio for the whole industry is a 27 for the consumer staples sector, and then I would say they're probably in this consumer packaged goods sector or industry, which is average PE of around 24, so they're right around that average, maybe a little bit above, but overall, like I said, I think they're probably not at the absolute best, but compared to the overall market and where some of those companies are at, I would say they're a pretty decent deal. And then looking at my position in my portfolio, I have about 0.57 shares. The current price is $133.42. And the dividend yield is around 2.6%, and my yield on cost is about 2.48%, and they pay me an annual dividend of $1.98. So as you can see here, actually, Procter & Gamble is currently the only company that I have lost money on in regards to capital gains. Obviously, that's not realized, but if you look here in my performance summary here, you can see Procter & Gamble is the only one that I'm down on my position at the moment. So obviously, you don't want to be down on your position, but that gives you another opportunity to buy at a good price. So as you can see, I think I did some buys fairly recently. I'm not positive. I sort of forget, to be honest, but that's my position, and they should be paying the next dividend sometime in May. It looks around May 17th, so I'll be looking forward to that and definitely excited to see that hit my account. So like I said, I'm not really going to be buying Procter & Gamble at these prices. I think I would like to see them under 130, which they're fairly close to that at the moment, but I just want to see them a little bit lower before I add to my position and make that a bigger part of my portfolio. So I actually did a video on another consumer staples giant sometime recently, which is on Coca-Cola stock. So if you guys are interested in checking that out, I'll leave a link right up here to that video, and you can see that. I'll leave a link in the description below as well if you're interested. So I want to thank you guys for watching this video and supporting the channel. It really means a lot to me, and I will see you guys in the next one.